Hey guys, I wanted to show my longer term plan with the ETF side of my portfolio. Anybody who's been watching sort of knows my longer term plan is to sell out of gold, mining stocks and Bitcoin hopefully, and sort of get into a longer term dividend portfolio. And I was looking to have half that in individual stocks and half in ETFs. So I've started the pie on trading 212 to get into. So thought I would show you sort of how I'm looking to break that down. There is the option to just have a total world stock market fund. Vanguard do one for about 0.3% expense ratio, but it's weighted by market cap, and I'm just not all that keen on it. It's called a total world stock market, and it's 60% US. So I know, obviously, if that is the market cap, then you're supposed to have 60% US, but it's not for me. So I'm looking to sort of be a bit more diversified. So I'm looking to have 14 at the moment, and I'm looking to have this as 12% Vanguard S&P 500. They don't actually do. I was actually looking at a Russell 2000, which is the smaller cap US index. Ideally, I would like to have sort of 6% S&P 500 and 6% Russell 2000, because the small caps sort of often over a long time period do a little bit better, but they don't seem to have many good Russell 2000 ETFs on here. They're quite expensive, so may just sort of consider that one. I wanted to have 10% in the Global Clean Energy Fund. I think that should do well sort of longer term. The developed markets, that's iShares Developed Markets Property Fund. If I just sort of come back out here. So that's the iShares Developed Markets Property Fund. So that's a whole world sort of combination of REITs, real estate investment trusts. So I thought 10% in that as a global one. I do want to stick with some gold. So often people will recommend having 5 to 10% in gold. So I won't keep this in physical gold still on the stocks. I'll keep it in the gold producers ETF that I'm in at the moment. 10% in emerging markets, just the Vanguard FTSE emerging markets. Then that's 7% in the Vanguard FTSE developed Asia Pacific. So this is your sort of Australias and your Koreas and that sort of thing. So 7% in that, and I've got a little bit more later on. Then Vanguard, this is Vanguard FTSE Developed Europe, excluding the UK, because I've then got my UK down below. So 7% in the sort of continental Europe, 7% in Japan, Vanguard FTSE Japan. And then I know I'm a little bit, heavily overweight on the UK, but if things sort of stay as they are, then I just see the UK as being undervalued at the moment. So I would put 6% in the FTSE 100 and 6% in the 250. Again, with sort of smaller caps being higher sort of growth over the long term. You can buy the FTSE All Share, which sort of combines the 100, the 250 and some of the smaller caps. But again, it's market cap weighted, so most of your money is going in the FTSE 100. So I just find having two funds and splitting between them is sort of putting more money into the smaller caps. So I would think that's a little better. And then as it's a dividend portfolio, sort of in each of the regions that I'm looking at, go with the S&P Dividend Aristocrat funds. So these are all companies that have increased their dividend for 25 years or more. And that will sort of constantly change. If people stop paying their dividends, then they come out of the fund. So quite happy to sort of invest in that and leave them where they are. So just gives you a little bit more sort of diversification. It's not just the biggest by market cap. And I have a little bit more in the Asia one, because I've only got 7% in the developed Asia Vanguard ETF. So just sort of those two combined, I wanted about 12-13% in Asia. And then that gives me 15% in US and 15% in UK. Still on the fence about, as I say, sort of whether I want to be this overweight on the UK and underweight on the US. But yeah, leave your thoughts in the comments below if you're sort of wondering about that underweight and overweight sort of bias. But yeah, so this is what I'm looking to sort of put half of my money into once I start selling out of other things. So this on the last 5 years has returned 7.41%. I appreciate this is a little bit lower than, strictly having an S&P 500 ETF by itself. I think that's about 14% at the moment. But it's not long-term what I would want to do. I can see the sort of top S&P companies underperforming sort of as we go forward. It's sort of what's happened before. Generally, the top performing companies of the last so many years often will underperform over the next sort of 5 to 10 years. So as I say, I would rather be more sort of diversified across the world, and I think this portfolio gives me that, and it should be more defensive if we do have a bit of a downturn, because it's got sort of all different countries, property, bit of gold in there. So obviously if I do build a reasonable amount of wealth out of selling my other bits, then I want to be defensive with a nice dividend yield. So yeah, leave your thoughts in the comments below, and I'm looking to build up my long-term stock side of the portfolio, putting together about 30 to 35 companies. May sort of whittle those down a little bit more, but yeah, hopefully do a video on that soon. And yeah, so like and subscribe if you want to see more, and see you soon.